Thanks, Sam. This is David. Let me give you some other instructions just a little bit so you understand how this works. Basically, Sam said, we're doing 8 hours of training. We just don't want to tie you up for one 8-hour session. So we've broken this into 4 segments, 2 hours each, of course. We've had lots of people that are asking about the PowerPoint things. You absolutely need the manual for this one. It's 516 pages that are numbered. There's things in front of that. I think it's about 540. Really, what this whole webinar series is about is everything from start to finish, pre-qualification all the way to post-closing of a mortgage loan. And that manual covers everything in there. We're going to try to navigate you through this manual so that this manual becomes like an encyclopedia for you. If we were to train on everything in this book, it's really about 5 days. We teach this live. It's about a day and a half, and we're squeezing that into 8 hours, literally. There won't be lunch breaks and things like that, but we're trying to get this so that you know where to go to find information and questions you have. Many of the topics in here, I did last week a 2-hour webinar just on HMDA. Jerod and I teach a 4-hour webinar, 2 2-hour segments on flood insurance. And so we've also had lots of people emailing us saying, when are you going to cover this topic and that topic? Well, throughout the whole thing, because, for instance, HMDA, there's stuff that's pre-qualification and stuff at application and once you close the loan and post-closing. And so HMDA is broken out into many different aspects of this. So I can't tell you this is exactly where we're going to be at what time. Now, we do plan to get through about the first 100 pages today. I want to go back to something Sam said earlier about questions. The reason we're not taking a question break in the middle and we won't be doing written responses after each of the first 3 is that people will ask questions in session 4 that are things that we covered in session 1. And we want to put them all together and answer really one answer. Maybe there's 5 or 6 questions. This isn't the first time we've done this. So we'll group them all together and give you one reference material, again, to all your questions. Also, many of you pre-submitted questions. Thank you for that. There are lots of them that will be covered in the next week, and the next week. And so we have some that we say, yeah, that's the material we're covering today. We're going to answer those. But if you feel like I'm not getting my question answered, because we're saving it until we teach that portion. All right. So again, 516 pages of information. I'd like to have you go to the table of contents with me, letter A, and you'll see what we're going to cover. And there becomes this 5-page index. We're going to hit the majors, the new things, and again, teach you how to navigate this manual. So make sure you have the manual. For those of you that were asking for the PowerPoint, I'm going to encourage you to put that aside. The PowerPoint won't do you any good in the sense because they're just pictures of concepts. The details are in the book, and that's what you'll need. So, well, you can see there the things that we're planning to get through. One more thing I want to point out. At the very bottom of letter A, B, C, all those, the table of content pages, you'll see a comment that says, if you see stuff in italics, we're quoting right from the regulation, and there's a lot of that. So we'll tell you where we're getting at. Let's go to page 1, for instance, and let's just give you the big picture here. On page 1, we start talking about pre-qualifications, but at the end of letter A1, for instance, we tell you we took this from the commentary to 1002.9, comment number 5, so you can go dig deeper if you need to. So that's the big picture. Now, more about mortgage loan life cycle. Again, you'll see that this is broken up into chapters. There's the pre-qualification stage, applications, what if you deny somebody, the shopping disclosures. We're going to get into underwriting, pre-closing, closing, post-closing, et cetera, and servicing. And so we've got the regs broken up into those time segments, a chronological order, if you will. So it's not written out like here's flood, here's HMDA, here's Respa. It's here's Respa at pre-qualification, here's Respa at application, et cetera. And I think you'll find this to be a unique but very helpful training. Well, we got lots to cover, so let's get right into it. If you'll go to page 1 with me, Roman number 1, let's talk about pre-qualifications, pre-approvals. Let me give you this first off. There's a difference there when it comes to HMDA especially. And if you're a HMDA bank, you might just want to write down something like for pre-approvals and pre-qualifications, if there's no house, there's no HMDA, there's no Respa, there's no truth in lending. Those things aren't triggered until a house is identified. But look at letter A. Pre-qualifications and pre-approvals do apply to Reg B. You can't illegally discriminate against somebody even though they don't have a house identified yet. So even though we may not have other regulations. And what's the difference here between a pre-qualification and an application is I don't have that house yet, okay, but I may be evaluating. So here's another very key thing for you to write down. It's if you say yes or no to somebody, you have an application. So if you can say yes or no. So I'm talking to someone about a pre-qualification, I pull their credit bureau, and I look at it, and it's horrible. I wouldn't loan them money to buy a tent. Then I need to send a denial. Even though it's a pre-qualification, it's an application. And so that's an adjective in front of our noun is how I like to say that. If you can say yes or no, then you have an application for Reg B. The other key thing I already mentioned there in A3 is that pre-qualifications are subject to Reg B. They may not be subject to the other regs, and HMDA is kind of an iffy thing, and we'll get back to that a little further. Let's go to the next page, page 2, and talk about HMDA specifically. That to be a pre-approval, and there's a difference, then you have to follow all of these things. And number one, you'll see a written commitment, and there's got to be there are conditions that you can put on it. But look underneath 1 and above letter A, written commitment, designated period of time to buy a house for a specific amount. And then you can have those conditions. Now go to number 2, to be a pre-approval program, to be a covered pre-approval program at your institution. Well, that's a new word. What does a program mean? And to me it says, well, it's not something we do occasionally, but I can't tell you how many. It's something I'm going to encourage you that if you don't know if you have a pre-approval program or not, you write out your criteria, what you do, what you say, how you do it, and give it to your field examiners in writing. Ask them to respond in writing if you have a covered pre-approval program. The big key difference between a pre-qualification and a pre-approval is found in B2 on page 2. About the second line, you'll see the words full review, and it goes on to say verifications. Third line, typically done as part of your normal credit evaluation program. In other words, we do everything. That's a pre-approval. Let me contrast that to pre-qualification. Pre-qualification is I probably am talking with the people. Maybe I'm filling out some debt-to-income kind of, quick analysis. I like to call it a gut level. But I'm basically saying if what you say is true, and I haven't verified it, then we would lend you this much, or we can't lend you this much, or whatever. You're coming to a short, quick synopsis decision. That's the difference. HMDA does not apply to pre-qualifications. HMDA does apply to pre-approvals, and we'll get to that next. Let's go to page 3, for instance. You'll see on number 3 there are several scenarios listed for pre-approvals. Now, if you have a pre-approval program, you need to read through those in more detail. Let's go to page 5 and get into Respa. Still talking about pre-qualifications. And what I'd like to have you do is look over page 5 with me quickly, but I'm going to take you to page 6. The last thing, letter B, 3B, I'm going to give you the cliff notes. Respa does not apply to pre-approvals. That is clear in the reg. Now, it wasn't clear when it first came out in 2010, but through several sub-memos and our arguments back and forth with HUD, they said, okay, we agree it doesn't. But they still have this caveat that says you can't mandate any kind of verification documents until you issue a good faith estimate and get an intent to proceed from the applicants. But there's a rub there then. How do I verify to do enough to do a pre-approval, but I can't mandate that they bring me those things? Well, you can ask for a voluntary verification information, and you want to make that very clear, and that's what letter A underneath number 3 on page 6 is about, the voluntary consent. So what we recommend, Roman numeral 3, last thing on page 6, is that you list out what you need, you make it very clear that it's voluntary, and you get an attestation from them saying, I willingly submit this so that I can be pre-approved. If you have that, the examiner shouldn't touch it. Okay? That seems like a kind of a strange way, but it's this rub between Respa saying you can't ask for or mandate any verification documents, but yet you need them to do the pre-approval. So how do we make sure both? We wrote that out. We actually sent that to HUD, and they said, yeah, we agree with that. I'm not going to say they officially blessed it, but they said, we agree that that's how this can be handled. We don't want banks strong-arming or burdening people to bring in verification documents, paying any money, et cetera, until the good faith is issued and we have the intent to proceed. So that really finishes up.